Ladies and gentlemen of the crypto space, we're live on a Friday, January 30th at 11:29 a.m. Your walking captain is at it again. So, where are we? We got our Fed pick. We had a massive breakdown in the dollar, followed by what is going on today, a massive rally in the relative valuation of our precious currency units. And that is pretty much the story for today. This rally from below 95, broke into 95, and it's all the way back up to 96.8. Absolute monumental rally. We breached the 6 month 100 SMA for the first time in years, ladies and gentlemen, to the downside. The last time we breached the 6 month SMA to the downside, or the 6 month 100 SMA to the downside, was in H2 2020, second half of 2020. And those were relatively good times. But just as we are all well aware, it is darkest before dawn. There's bad times before good times. So that is exactly where we're at. And if we zoom in, you could literally see what I'm talking about visually. So this is our current 6 month candle. It breached the 6 month 100 SMA to the downside, and we're wicking meaningfully. And it is what it is. There's nothing to do about it but observe. Now, that brings up two completely separate conversations. We look at the technical analysis to understand what's going on, where we are, why what's occurring is occurring. And then we also have our conversation about our choices, actions, decisions, capital management, methodology, so on and so forth. Those remain entirely unchanged, and those I've clarified in the greatest extent possible over the last years. Now, there is one point that I'd like to remind folks of. Now, it's something that I haven't mentioned in quite some time, uh, unfortunately. But as prices do what they do, and as people are lost along this treacherous path, it's a good reminder about how I think about things. Now, I mentioned this morning in a post, as you get more and more into capital management, you realize it's not the investing that's the hard part, especially in crypto markets. There's so few investments that are possible. I mean, for the folks in this stream and on Discord that have been along for the ride for so many years, we've come to the point where there's only a handful of the highest quality investments. I mean, what, a half dozen? Maybe a dozen if you're really going out on the risk curve, and you got your primary allocation, your secondary allocation, one, two, three mid-sized allocations, and then maybe four or five. I don't even know. You can't even have I don't even see past six high quality investments right about now. So it's not the investing that's complicated in crypto. It's the accounting. And the accounting is probably the most important thing to get right. So why do I mention accounting? With regard to surviving markets, one of the most important things I've come to love, appreciate, or really focus on is one of my core accounting principles. One of my core accounting principles is a purchase, not a position. So most people think about investing as they own something and they're going to sell it at a higher price than they bought it. Buy low, sell high. Capital gains methodology, see, accounting, standard accounting. Or you buy something, you get cash flow, accounting again. But in crypto, we've been afforded with something that's never existed before, and that's the time lock. Now, nobody talks about the Bitcoin time lock. I don't know why. I think that was one of the biggest innovations in the history of finance, and no one uses it. At least no one publicly discusses it. But in DeFi, post 2020, we have the notion that started with Michael of voter escrow and these 4-year locks. So this concept of locking changes the equation, especially from an accounting standpoint. Why is that so incredible? If you deposit something on Fidelity or a brokerage account, an annuity, a deposit of some kind with a company, you can call that company and forcibly withdraw it, withdraw the capital, sell something, make a change to an allocation. I mean, heck, even a 401k, they'll prevent you from liquidating a 401k while you're employed with the company. But the second you leave, you could roll it over into an IRA. So you can make mutations, modifications, changes, adjustments. Everything in traditional finance is mutable. So what changed in crypto is the immutability and determinism. Now, there's few protocols, few and far between, have done it right. Even Pendle of late has mutated their core functionality. And Michael from Curve has mentioned that that is an issue. And I wholeheartedly agree. Immutability changes the equation because immutability is consistency. And consistency with regard to accounting is everything. Determinism. What you expect to occur occurs and is going to occur predictably, provably. Now that changes the equation entirely. But as I said, a purchase, not a position, of the dwindling investable landscape. What is a great investment? Now, I don't need to go into that. We've discussed that. We discuss that all the time. What are the good investments? And I focus on cash flow for optimized accounting purposes. But if you think of a purchase, not a position, and you're thinking in terms of immutable deterministic contracts that possess the primary characteristic of a lock, which means it's now provably illiquid, immovable, unmodifiable. You could prove it to a third party. And that's a remarkable achievement. Why? If you cannot liquidate something, if you cannot sell something, what's the fair market value? The fair market value is zero. Now, a time lock of 4 years, but look at yield basis. Yield basis introduced the idea of the perpetual lock, and Velodrome did as well, along with Aerodrome, a permanent lock that automatically updates the lock. Now that's taking it to a step further. That's lovely. Now, if you take these permanent locks with deterministic immutable contracts and you fold that into a business structure that says under no circumstance can anything change, and these immutable deterministic locks are to be treated as immutable deterministic locks forever. That means the things you've purchased are investments. You own something that has, frankly, a $0 fair market value. So, why is this meaningful psychologically to me? It means the fair market value of my crypto portfolio is basically just the cash flow. Anything and everything that I own has a $0 fair market value from an accounting standpoint. They cannot be sold, they cannot be transferred, they cannot be moved in any meaningful way, any meaningful accounting or, well, any meaningful way. We'll keep it at that. And that to me is comfort because that to me simplifies the equation. The hardest thing we deal with in these crypto markets or investing in general or adulting in general is all the choices and complexities that we have. You understand that, ladies and gentlemen? Choices and complexities. So, choices and complexities are difficulties to surmount and overcome. We have burdens, responsibilities. So, from a rational standpoint, the captain makes it an absolute requirement to simplify as best possible. So, Over the years, we've simplified the shit out of the investable landscape. 5 businesses, 4 rules. We've simplified the crap out of accounting by focusing on what is investable and how we want to capitalize on these markets. Great. Now, because we've done that, now we could simplify our responsibilities and how we manage what we own. And we do that vis-a-vis our interpretation of accounting. So if our value of our indefinitely time locked assets is zero, there's nothing to think about. We made a purchase, we live with our purchase, and our purchase has an output. And the output is the only meaningful inspection to make. Okay? So, as I've said maybe years ago, and it gets lost in some of the streams, at some point you got a chart that's up, down, up, down, up, down of the cash flow. It goes up, it goes down. You have a period of prosperity when you make more capital, more receipts. You have a period of austerity when you make less receipts. And to me, when I describe this to you, it's the ultimate simplification of everything: investing, accounting, and the psychology that results from those two extraordinarily treacherous endeavors. Because as we can see on social media, this game drives people mad. It drives people insane, and we lose people along the way. So I hope that simplifies things, especially the way I think about things. The price, when I look at things like this, when I look at the technical data, this is my way of knowing where I am. This is my compass. This is me on an island, and I want to know what the hell's going on over there, over there. You know, what the fuck are they doing over there? The cat meme. It's imperative to know where you are along the journey, on your path. Now, the thing that I always come back to, the destination remains unchanged. And I feel comfortable, more comfortable than ever, that my understanding of the destination is a good place. And we get there. It just takes time. And the path is going to chew up and spit out the vast majority of people. And our goal and our fiduciary responsibility to ourselves and our families is to be psychologically reasonable and optimized. And to be psychologically reasonable and optimized, you have to have an optimized investment thesis and optimized accounting. Then and only then can you sleep well, knowing that you made good choices and knowing that you continue to make good choices. Now, make good choices. If we have minimized the choices we need to make, doesn't that mean we have less opportunity to make poor choices? Hmm, I guess that's a decent statement. I mean, you can still make poor choices, but if you have less choices to make, you have less odds of making poor choices and you have less responsibilities. That's all I want to do is make less choices. All I want to do is simplify the equation to make things as easy, consistent, repeatable, predictable as possible. Why? Because when crypto came into existence, we were introduced to the idea of immutability and determinism. So all these ideas I've just shared with you come back to this very simple technological revolution or technological evolution that was introduced by the idea of a financial landscape that has instruments that can actually be immutable and deterministic. And to me, that unfucks everything. And we've talked about politics and we've talked about business and AI and robotics, maybe not as much as I should. But the biggest burden and problems in society are because of humans. If something is immutable, You're not going to have immutability in politics, but you can have determinism. That is a decent goal. The contracts have shown us, the smart contracts have shown us that we have a capacity to have some sort of determinism at some point. I don't think anytime soon, but that would be an interesting idea. Deterministic governance at a government level where there's predictability. Because things are going on, this is what's going to happen. Imagine that from a monetary policy standpoint of the Federal Reserve. These are the conditions, and because these are the conditions, interest rates go up or interest rates go down. Then nobody is guessing, nobody is gambling, nobody is betting. The interest rate will go up or the interest rate will go down, and everyone will know why it's going up or going down. Now, I would love that. Maybe that's me. That's a utopian me seeing how to fix everything, unfuck our civilization. And maybe we don't get there. But if I at least can do that for myself and optimize all of those considerations for myself, then I'm doing what's best for myself and my family, okay? And that's the story I like to tell you guys. My journey, my path, how I've gone to the way I used to think and how I've arrived at how I currently think. Now, clearly, you go back on old streams, you see a very different captain. And that's maybe an interesting inspection. Probably more interesting for you guys rather than myself. You know, you always look back at yourself and you're like, oh, dear Lord, did I really say things like that? Everyone is always their biggest critic, their own biggest critic. So I don't really look back. I enjoy very much looking forward. And this idea, this story that I tell you guys, I have no doubt will continue to evolve into the future as I continue to do cardio live on stream. And I'm sure it'll be slightly better, slightly improved over time. The story will continue to evolve, but we've laid one heck of a foundation, some serious roots about how to simplify things. Therefore, there's one thing that's for certain about the story. It will be increasingly simple in the future and forever more and more rational. Now, we've been watching the DXY creep up all day. Not much to write home technically. Bearish market conditions, narratives left and right, exchanges dumping. Fed pick, cool, very nice. What does that mean from a market standpoint? Oh, we can speculate on choices and decisions that humans are going to make? No, we're not. I'm not. But I find the social media narrative today interesting. Bitcoin crept back over 83,000. I don't make predictions about Bitcoin. We can look at the weekly though and see very clearly there we are in weekly sub 100 SMA territory. The orange circles are now the same. These are unequivocally bearish market conditions by any historic comparison, and I prefer this historic comparison. 3 bounces off the 50 SMA, 1, 2, 3, 1, 2, 3, 1, 2, 3. Interaction with the 100 SMA and a breach to the downside. It's the same exact thing that occurred in 2022. Now, bear in mind, the differences, the distinction between 2022 and now remain, even though the price action is identical and playing out on the same path. Market conditions from a currency supply standpoint are the opposite. We are in a currency expanding environment versus 2022, which was a currency destruction environment. We also have a completely different political situation with regard to the bills that are going through Congress. Completely different political environment, different administration expectations, different stated administration goals, domestic US manufacturing, supply chain, so on and so forth. So while the price action of the two orange circles is basically identical, we're in a very different situation economically and politically. Dare we even mention what the hell is going on with gold? So, as always, so many things are the same, especially price action, the two orange circles. But as always, things are quite different in very interesting, constructive, and meaningful ways. That's about it from a Bitcoin and a currency, a DXY perspective. Curve continues to get hammered down to 32 cents. Yield basis down to 22 cents. Move at a respectable 60. I still firmly hold that this is a forward-looking indicator. So sometime in 2026, things turn meaningfully positive. Interest rates are still elevated, 4.24, but my opinion is quite different than most. I see this as Treasury generally being successful as a manufacturer of global money, more or less. I have shared that opinion. I don't need to clarify too much further. At some point, I expect a breach of this weekly 200 SMA to the downside and a push towards probably mid threes, 3.25, something like that. I don't think we get to the twos. So those are some speculative statements on my part. I have no idea what the hell is going to play out, but I generally expect at some point collateral, systemic money to appreciate in value. And I expect the trifecta of bullish confluence to occur, not from a technical standpoint, but from a money, relative value of currency, from a relative volatility of money, the move indicator, and the relative value of money. Did I say current? So DXY is the relative value of currency. Move is the relative volatility of money. And the 10-year is the relative value of money. Money prints currency. So as money gets more expensive, interest rates come down, and the volatility of that money decreases. And the relative value of currency, the dollar comes down. We have the trifecta of bullish confluence. So today is obviously a green day across the board. That is not what we want to see. What we want to see is the relative value of the dollar come down, the relative volatility of money come down, and the relative value of money increase. That would make all three of these red. One, two, three. That's clearly not what we see. We've also had a remarkable retracement on gold. This is an absolutely staggering, almost 10%, producing the most historic wick anyone has ever seen in the price of gold. 5,500. We were at 50, almost 5,600. We are below 5,000. So what we are encountering is volatility. So basically, gold getting to that price was people redefining what money is, or at least entertaining that conversation and expressing that with financial activity. So no doubt, many things that people could speculate on, but what is unquestionable is when you see a wick like this, some serious shit is going on. And people are making big speculations about the structure of the system changing. So that's exactly where we're at. Gold up at oil up at 65, better market conditions or cheaper oil. So these are a little bit tightening conditions. Hence, crypto prices doing what they're doing, a little marginally negative on the day. On US equities, nothing too exciting to write home about. Air down at almost 40 cents. This is price discovery to the downside, in my opinion. That is an inverted hammer, but I wouldn't take that as a bullish inverted hammer of a reversal. I would take that as we are below this bottom level of 49 cents. Price discovery to the downside. So I'm looking forward to Q2, the launch of Aerodrome on mainnet, and everything that has been discussed about the evolution of the protocol. Certainly exciting. Nothing changes about that excitement. And clearly, Aerodrome is one of those protocols that qualify as investment grade as we discuss it with the five businesses and the four rules and simplified accounting, so on and so forth. Not much else to mention on the watch list. Total three down. Just is what it is, below a trillion at this point. If you're on X or on YouTube, feel welcome to ask any comments. More than happy to answer any questions. Ladies and gentlemen, it is commentary time. But we'll keep it short. If you guys don't have too much, I'm more than happy to keep it short. Athletic Federation in the House, President accounted for. Sir, yes, sir, Sir Joe, present. I'm getting there. I'm getting there. My goal isn't size. I've been big and I wasn't the healthiest in my 30s, but now I'm focused purely on leanness and red. Just very healthy. I'm at a respectable 202 pounds. I guess middle of last year I was 258 and fat. Now I'm at least getting leaner. So I feel much better. Today's going to be a big day on the cardio. Heart rate's nice. Less low intensity, steady state cardio. I'll be doing 5 hours today. I've been on this machine for 3 hours and 44 minutes. By the time I'm done, it'll be a total of 9 miles in 5 hours, 1.8 miles per hour. Listen, you want to make a change? I'm not a guy to make small changes. So, with regard to health and wellness, sometimes big changes are worth the effort. Peter, always a pleasure. Hope everything's good. If you haven't seen my updated memorandums, some of them, well, my most recent is pretty on point at this point. It's really goddamn, it's so good. It just, it just, it's a document that's like, oh, that's good. So I'm quite proud of that one. Tape pusher strutting through the storm like a capo landlord. I'm good. Most people get lost in the noise. Meanwhile, we have our consistent, repeatable story. The story doesn't change. And most of our commentary, most of our stream nowadays is like a weatherman discussing what the hell's going on, why it's going on, understanding what's going on. As I said, a compass. We use a compass to say, where are we? Why? There's a storm in the horizon. And that's it. Because when you understand where you are, you're not lost. You're not struggling to figure things out. The destination remains the same, just like sailors of old or captains of old, staring off the bow of the ship. We know where we're heading, and we've clearly laid out why that destination is an inevitability along a remarkably treacherous path. The fuck they doing over there? Yep, that is a quality meme. Always and forever. Peter, that's an interesting point on Bitcoin. 3 taps. Looking to see how it moves in the orange circle. Exactly. So we have some very straightforward comparisons to make between 21 and 22 and 25 and 26. So I don't personally think we have this extremely bearish market that we had between 2022 and 2023. Maybe trend horizontal, but my expectations don't mean shit because fair market value of the portfolio is zero, and all that matters is the cash flow and optimized accounting. So that's all that matters. It is something to have an asset on the books that has fair market value of zero, cannot be sold, and still pays really novel, extraordinarily novel. It doesn't exist. No one even considered. You couldn't have considered it because you needed the software. You needed the programming language, and that was introduced with Ethereum. You needed the blockchain. You needed the immutability and determinism afforded by the blockchain. So these types of financial products couldn't have existed. A judge could have forced a behavior. But when you're talking about deterministic software, a behavior cannot be forced. Software cannot be overridden forcibly. And that is downright fascinating, to say the least. So a round trip, the crypto market from 23 to 25, pretty much. So we have basically round tripped all of 25, 24. Yeah, Round trip, baby. Let's see how how Ben's vision of the future plays out. Because if it's up to Ben, we're going to have our first lower low on the Bitcoin logarithmic, as I posted a little earlier today. I'm not a bear. I'm not overwhelmingly bullish. I'm a realist and an op. I'm not an optimist. I'm an optimizationist, a reductionist. I like to simplify things and be positive about what I understand. That's what. Hope that helped, my friend. So BTC price is bearish yet constructive. I take your forecast with a grain of salt because unlike most people, you can withstand the big drawdown. Correct. It's constructive in that these two orange circles are the same from a Bitcoin weekly standpoint. Both breaches the 100 SMA to the downside. So as I mentioned earlier, we have this positive correlation in price action between 2022 and now. So do we see this remarkable drawdown between 22 and 23 that we saw back then? What was it like back then? What was market conditions? It was an absolute catastrophe. We were in a tightening policy environment, a tightening global money supply and currency supply environment. It was a crisis. That's not what's going on now. So from a price action standpoint, sure, we're breaching the weekly 100 to the downside. But compared to 2022, the orange circles, it's a completely different political environment, a completely different situation with global currency supply, and a completely different situation with global money supply. Especially throw gold into that conversation. It's completely different. It's different this time. Price action, the same. Everything else different. So that's the takeaway. That doesn't mean anything, like with regard to forecasting, but that tells us something constructive, something interesting. It's imperative to know what's the same and what's different because that's part of the compass to know where you are and why what's going on is going on. I mean, look at the bills in Congress. Look at the tone of the administration. Crypto is something very different today than it was in 22. And certainly 2020, 2021, 2019, 18. Oh my God, there we go back even further. It's nothing comparable to what it is today. So you can't know where we are unless you know where we came from. And that's the story that I like to talk about. My man, where would you look to take another chunk of curve? Cheaper. I don't have too much capital available at this point. I have a lot of obligations in 2026, and those are priority. So my sentiment is my purchases, not positions, are nicely sized. For the vast majority of the things that I bought and achieved my target size. So I don't need to add. So depending on price, depending, so how do you take a position? Do you have enough capital to acquire an appropriately sized position? I've often said that historically. So first off, you need enough capital. So if you own a certain quantity of something and you could increase its size 20%, 50%, and that's what I did with Curve down at whatever price. I think I got a cheap price on Curve. Oh, good. That's the worst perspective to talk about. But I bought the Curve down cheap, 20 cents, 21 cents, I believe, was where I increased the position size by 50%. So if you could get the right price and you have enough capital and you could increase a position size a meaningful amount, then those are decisions we can make. But if you've achieved an appropriate position size and you don't need to acquire any more, that's okay also. What deflates, reinflates, what will be, will be. These are purchases, not positions. Our biggest burden is the psychology. Minimize your choices to sleep well at night. Hope that helps. Did a deep dive into Samsara this week, and it's really interesting concept in tech. Immutable. 4. Protocol on liquidity. Pace and solve, which I like. going to be core Solana position, have JLP and CLPs. I mean, there's from a Solana perspective, there's nothing really that's investable in my opinion over there. I mean, sure, cash exposure, liquid positions that are more consistent with my cash definition than an investment, JLPs and CLPs, obviously. But Samsara and Nirvana were quite reasonable and interesting. And that was my 2 cents. And that's why my exposure was reasonably sized. And that was it. They're purchases, not positions. They're locked. They can't be sold. And that is exactly the types of choices and decisions I make. Ben has been correct for years. No reason to think he'll be wrong until proven otherwise. I expect him to be right. Most people are fucked. Most people will lose all their money because they speculate on buying low, selling high. They end up selling at the wrong price. They have too many choices and too many decisions to make. They've made the capital management equation too complicated and they don't sleep well at night. Ben and I talk a completely different story. We think about completely different things. It's as simple as that. Not a contradicting story, just a different story. Going to pull out of CLP on Solana and use Samsara, keep the JLP position. Samsara far more valuable and non-liquidatable. 0% interest makes more sense than CLP concerning the solid revenue. Yeah, the zero interest loans are quite interesting from an accounting standpoint. I mean, just everything about Samsara from an accounting standpoint is quite interesting, to say the least. That brings us to the end of our commentary. We could keep it short today. Not a big deal. It's about 36 minutes so far. 118 people live on stream. If you're on X or on YouTube, you have any questions, feel welcome to inquire. More than happy to talk about anything. We've gone through the watch list. Nothing else stands out as super interesting to discuss. Seems like a big difference is that you see DeFi growth as an inevitability. Yes, I have mentioned my political observation. I don't think it's politically acceptable for a bubble in real estate. I don't think there's political appetite for a significant bubble in equities. I think there's certainly appetite for a redistribution of overpriced pig shit, NASDAQ and the S&P, into the Russell 2000. I think there's certainly the case for an emerging market cycle, as Tavi talks about. I think the emerging market cycle, it fits right into the cryptocurrency narrative. But I think the exact reason we're seeing so much activity in crypto from an administration and congressional standpoint is to get all the pipes in place because crypto is the only place that a bubble will be accepted by the general public and too many fingers will not be pointed. If you could create a bubble in a market and tax it, they will be able to finance their fiscal policy because they need a bubble. They needed a bubble in 2002 to 2008. They chose real estate. They needed a bubble in 2012 to pull us out of the 2008 Great Recession. They got a bubble from 2012 to 2019 in September when the United States banking system failed. The story that I've told many times, not 2020, September of 2019 is when the United States banking system failed. And that bubble, taxable. And clearly they got a bubble post 2020, but it's a whole different world post 2020. So you got pre and post 2020. Post 2020, clearly they were able to tax the equities markets, but now we're getting into that fourth turning type of conversation. Nobody is okay with the prices of the S&P and the NASDAQ. There's civil unrest about how much wealth it has created, the disparity it has created. People are uncomfortable and angry about it. There is no political appetite for another bubble. There's no political appetite for a 10x in NVIDIA. It will not be acceptable. But there is political appetite for a bubble in the crypto markets because the general public predominantly views the crypto markets as owned by the general public as compared to whatever the hell goes on in equities. They view it as not a libertarian, but a more so, it's not owned by the wealthy elite as compared to equities. Crypto is more so owned by the people. All right. So that's my takeaway. So they need a bubble. Crypto is the only thing that fits the bill. And all they need to do is finish off the tax pipeline, get all the centralized exchanges, the 1099 DAs, funnel everything, and they could tax it. And then they could do a bubble. And then they get their tax receipts. And that's what they want. It's a business. That's all it is. Very straightforward, simple business. Not sure if Ben does. You know me. It's irrelevant what other people think. I'm right. Everyone else is wrong. And that's okay because I have no choice in the matter. You see what I'm saying? I have no capacity to make a choice. I made my choices. Past tense. I made my purchases that I cannot get out of. And I understand those purchases in this framework that I discuss. All I get to do is sit back and observe using my compass to understand where we are. I get to watch the path and the journey as my choices have guided me, and I get to see where this journey ends. I am guaranteed to have front row seats to whatever the hell plays out. I have no capacity to not have exposure. And that is something that lets me sleep very well at night. If BTC are mostly flat down for the next bunch of months, then how do you think that'll affect yield basis? It depends. The yield basis makes revenue on volatility. Yield basis wasn't the best revenue the last couple of weeks. VECRV revenue was up nicely this past week. So generally speaking, I have a very low expectation on increased cash flow. I expect austerity to continue. I expect at some point in 2026 we'll have some prosperity. I sure as hell hope so. I got private school to pay for. Um, Generally speaking, I'm mostly optimistic. I tend not to be a pessimist. I have told you guys about wake up money. As long as I have wake up money under control, I'm comfortable. That means I have planned and prepared and executed well, not overspent, and I manage my accounting in a reasonable, rational way. My man. Why do you think they need a bubble? I don't understand the finance fiscal policy. So Congress has spending. I mean, look, there's literally a fiscal crisis in New York, fiscal crisis in California. They got budget deficits through the roof. And the last thing socialist states want to do is cut spending. So that's a crisis. Uh, they're not going to be issuing debt necessarily the same way the federal government does. There's New York State, municipal bonds and whatnot. Same thing with California. It's the same thing with every state. But there's always a need for a bubble because that's how a debt-based society works. You got to grow your way out of the debt, but you grow your way out of the debt nominally, which is basically transitory bubbles. So the more controlled the bubble, the less volatility, the better, the more healthy it is. But there's little control because humans are degenerates. So you get these bubbles, overextend to the upside, overextend to the downside. Regulators have introduced levers to try and control the volatility. I've discussed those, DTCC and stuff like that in the treasury market. So they have increasing control over volatility. But look how that played out with gold. That's some serious volatility, ladies and gentlemen. I wonder what a move indicator for gold would look like. That's some serious volatility. So they always need a bubble. Otherwise, you can't pay the bills. You need to grow the tax receipts significantly. And you're not going to grow it with domestic manufacturing in the next 5 years. Maybe in the next 10, 20 years, sure, you could grow and get those fiscal tax receipts up. But the only way you're going to do it in short order is with a monetary bubble. Well, fortunately, the world goes on a monetary binge cyclically. So it creates its own bubbles. It's not like they need a bubble, it's that the bubbles occur. And all they do from a policy standpoint is really capture that from a tax standpoint and funnel it into fiscal policy, and that gets them reelected. That's how politics works. Pretty straightforward equation. Hope that helps. Oh, you mean to tax everyone? Yeah, they need a bubble so they could tax it. And that's how they get their receipts. Hey, Cap, can you explain how DXY and MOVE relate to depend on interest rates? The Fed controls only the latter, right? The Fed only controls interbank lending, the interest rate between banks, which is basically loose control over short-term interest rates. The Fed has little to no control over long-term interest rates, 10-year and higher, which means they have little to no control over mortgage rates. Now, back in 2020 and whenever they've done intervention, they intervene to a degree by buying MBS, mortgage-backed securities. So there's ways for them to intervene, but everything that's going on indicates they don't want to intervene with the QE, be it in treasuries or MBS, because that creates very perverted financial conditions. So generally speaking, the most important thing to understand with regard to DXY and MOVE is two markets, the global currency market and the global money market. Two separate markets. Money prints currency. We don't use money for spending purposes. We use currency for spending purposes. We spend dollars. Dollars are not money. There's three primary components to global money. First and foremost, the United States Treasuries are the primary global money. Clearly, precious metals, hard money, is money. Gold, silver are the precious metals, less so than gold and silver, gold predominantly. But United States government treasuries, long-term United States government debt, is the primary money used around the world. Now, nobody uses that for spending purposes. You use that to create currency. And you create currency from money vis-a-vis double entry accounting in the Eurodollar banking system. So that's an interesting process which we've discussed in great length over the years. So DXY, relative value of currency, MOVE, relative volatility of money. Lower relative volatility of money plays into capacity for the global financial system to convert said money into currency units, vis-a-vis underwriting at banks as gatekeepers and the capacity for banks to expand the liability side of their balance sheet to balance their double entry accounting books. That's a lot of sentences, a lot of loaded phrases. Feel welcome to rewind and repeat, but that's generally the gist of how that works. Peter was building a pendulum position now. The change in tokenomics I put into CLP. Hopefully the speculation will get me paid. Now I'm building Railgun. Privacy position pays WETH die rail. Pendle. I don't think about it much anymore. Rail, cool tech. Famous last words with regard to cool tech. Great tech isn't always the greatest investment. I've said that about many protocols over the years. I like Rail. I like privacy. Do I do too much with privacy? No. Do I do anything really with derivatives? Pendle, Spectra? No. Food for thought. It's not for me to say. What I like is what everyone likes, and that's okay. And there's nothing wrong with cash exposure. As I say, cash, acquire Rail or Pendle, and you throw it in your cash position. And basically the capital gains methodology, buy low, sell high, so on and so forth. To each their own, but I define those as cash. You could spend them, and they are volatile in price. They go up and down. Okay. To each their own and their choices. I'm here to specify my bucketing, cash versus investments. and hope it helps other folks simplify the equation. That's what I do, and I think that's the best thing that everyone does. You're very welcome. Lots of good pointers. We'll definitely rerun, repeat, and go through with Gemini. My man, yeah, clearly this is a long conversation we've had for years. AI is no doubt going to help throw down double entry accounting, Eurodollar market, how banks convert collateral into currency. You bring a house to a bank, it's called a HELOC, home equity line of credit. You give them the title of your house, and they will give you a deposit in a bank account. You get a $50,000 HELOC, you give them the title, they give you a deposit. That deposit isn't them moving dollars, they're creating a deposit. So that's a liability entry in their balance sheet. You could withdraw those dollars, converting those liabilities into physical pieces of paper, or an ETF and transfer those liabilities to another institution. You could even pay a liability with a credit card. The bank created those dollar liabilities. That's the biggest thing to understand about the global financial system, how the bank creates a liability out of nothingness. It's an IOU for dollar currency units, which they could create. And obviously they have constraints. Primary constraint is they need to balance their books, assets and liabilities. And that's me clarifying the idea of double entry accounting. They got to balance their books according to government regulation, but they can create liabilities as required to balance their books. Creating a liability is basically creating a loan. So when the banks say they're going to match $1,000 for the Trump accounts, I found that very interesting. So they could literally create liabilities as needed to balance their books. So I found that quite interesting. I hope that helps. Okay, ladies and gentlemen, thank you for joining me today. We're going to wrap it up. I'm coming towards the end of my walk anyway. I got about 50 minutes left. 137 people made it to the end of the stream today and are all now that much more rational because of it. Friday, January 30th at 12:22 p.m. Stay cool, calm, and collected over the weekend. Find your compass. Simplify things. The journey is going to throw a lot of people off. We're going to lose a lot of people. But as we look back on our streams over the years, the destination remains as clear as ever, based on our understanding of the way this global financial system works and the stories that I've tell hopefully clarify things. Wish you all a good one. Find some time to get some cardio in. Take care of yourselves and your families. See you guys and gals next week. Till then, peace.